What if Apple's next big move isn't just a new phone but an entirely new category of device that could redefine the company's trajectory for the next decade? Welcome back. Today we're diving deep into a report that's sending ripples through both the tech world and Wall Street. Apple is reportedly planning to launch 5 new iPhones, and the crown jewel of that lineup is a foldable iPhone with a rumored price tag of $2,500. Let's unpack what this actually means, because there's a lot more beneath the surface here than just a flashy new gadget. First, let's talk about the lineup itself. 5 new iPhones in a single cycle is not a casual decision. Apple has been methodically expanding its product tiers over the years, and this would represent one of the most ambitious iPhone releases in the company's history. The standard iPhone 17 series is expected to continue, but it's the foldable that's capturing everyone's attention, and for good reason. A $2,500 price point is extraordinary, even by Apple's premium standards. To put that in context, the current iPhone 15 Pro Max tops out around $1,200. Apple would essentially be doubling its ceiling price with this device. That's not just a product launch, that's a statement. It signals that Apple believes there is a meaningful consumer segment willing to spend at that level for a fundamentally different form factor. And historically, when Apple bets that big, they tend to be right. Now, Samsung has been in the foldable space for years with its Galaxy Z Fold lineup, and Google entered with the Pixel Fold. But neither has cracked mainstream adoption. The question Apple is implicitly answering here is why. Many analysts argue it comes down to software optimization and ecosystem integration, which is precisely where Apple has its deepest competitive moat. If Apple can solve the durability concerns, the crease visibility, and the multitasking experience that have plagued Android foldables, this could be the moment foldables finally go mainstream. From a stock perspective, this news is genuinely significant, and here's why. Apple's iPhone revenue has shown signs of plateauing. Growth in China has faced headwinds. The company has been leaning heavily into services revenue to maintain its growth narrative. A foldable iPhone at $2,500 introduces a powerful new variable average selling price expansion. Even if foldable volumes are modest in year one, the margin contribution from a $2,500 device is substantial. Wall Street analysts who follow Apple closely know that ASP, or average selling price, is one of the most sensitive levers in Apple's financial model. Think about it this way. Apple doesn't need to sell tens of millions of foldables to move the needle meaningfully. If even 5 to 10 million units sell in the first year at that price point, the revenue impact is significant and the margin profile could be exceptional, potentially rivaling or exceeding that of the Mac lineup. There's also a halo effect to consider. Premium product launches tend to drive aspirational interest across Apple's entire ecosystem. Consumers who can't afford the foldable may still upgrade to the iPhone 17 Pro or increase their Apple services subscriptions. The foldable becomes a brand statement that elevates the entire lineup. Longer term, this move tells us something profound about Apple's strategy. The company is not content to simply iterate on a decade-old form factor. It is actively investing in what the next 10 years of personal computing looks like and betting that foldable displays are a cornerstone of that future. So the real question isn't whether a $2,500 iPhone is too expensive. The real question is, in 5 years, will we look back at this moment as the day Apple once again changed everything we thought we knew about what a phone could be?